Thank you for joining us for Endowus Live. Today's topic is, what value does a financial advisor bring? An interesting topic and very timely, because CPF board has announced a new series of CPF investment scheme fee cuts, and we want to discuss the details and what that means to you. And so you have myself, Sam Ree, the CIO at Endowus, and also Greg joining us as well. And so we'll introduce and get going soon, but we'll start with the disclaimers, which we need to flash. And then we'll move on to a quick plug for our Endowus YouTube channel. As you know, we have a regular session most of the times weekly on this Wednesday, 7 p.m., but sometimes ad hoc webinars at lunchtimes or different times during the week. But we're trying to provide our existing and potential customers with wonderful content so that people can help learn and really help people invest better. And so these are the kind of topics that we've discussed in the past. Please click below and subscribe to the YouTube channel so that you'll receive an alert and message as soon as we have new content that comes up that you might have missed. But please do join us also live, because you'll be able to ask questions through the chat function. We like to keep it engaging. So thank you, Tamming Min, who just said hi, Sam and Greg, on the chat. We are looking at it live. We're screening it. And we'll be answering your questions from the chat. So thank you for that. And then we'll move on to a plug for next week. So Greg will be hosting, and we have our friends from Dimensional Fund Advisors joining us. And this time focusing specifically on equities and how Dimensional does equities investments. Dimensional, as most of you know, is one of the pioneers in systematic quantitative investing in equities based on Nobel Prize winning academic research on factor-based investing and how to position your portfolios towards the proven factors of returns that hopefully will be giving you additional returns above the market beta returns over the long term across multiple decades. And so Joel Teasdale, who's the head of Wealth Management Group for Asia, will be joining us from Dimensional, and Greg will be hosting and providing his wonderful insights and input from Endowus as well. So please join us, and it's actually on Tuesday instead of Wednesday, 7 p.m. So thank you for that. With that, we'll jump straight in. We'd like to introduce you to Endowus and also the two speakers today and the team. So these are the core members of the team that we have up here. Endowus was really created to solve the pain points that we experienced individually, trying to invest our own money. We struggled to find good advice. We struggled to find access to great products, and the cost of accessing and investing in Singapore is just really high. And so the team has come together to solve for these problems, solve for these pain points, and help all of us in Singapore to invest better. And the mission really is to help people invest better, to live easier today, and to live better tomorrow. So I am the Chief Investment Officer of Endowus. Been working for 26 years in the industry, mostly on the institutional side. I was formerly the CEO and the CIO, the Chief Investment Officer of Morgan Stanley Investment Management across Asia. And I was with Morgan Stanley for about 17 years of my career. And I really do believe that there is a much better way to invest your money, to manage your wealth holistically. And Endowus is a platform that was created to solve for these problems. So really excited about what we're doing and what we will bring to the table. So with that, I'll hand over to Greg to introduce himself.
Thanks, Sam. Hi, everyone, this nice Wednesday evening. So Before Endowus, I started my career at UBS in the investment bank, where I was covering private equity and venture capital firms. There, we were mostly advising, sovereign wealth funds like GIC, Temasek, and other large pension funds around the world on how to be allocating to the private markets, while at the same time helping the private equity and venture capital funds, raise money so that they can go and invest and grow businesses. It was a very high level job, but I learned a lot. And that's kind of where I formulated my investment philosophy. I left UBS to join Grab Taxi when it was taxi only and cash only, if you remember those days. And this is 2015, I took on the head of the payment role, leading business development and partnerships for payments and technology, building out over 100 payment methods across the region. So that's really where I got sort of the financial experience, the technology experience, and that came together to start Endowus and solve a personal pain point of investing holistically for me and my family for a better future. And it really rounds out in access to better products at a lower cost with aligned and suitable advice. And advice is what we're really talking about today. As a result of Endowus's efforts, we are the first and only digital advisor for CPF, SRS, and cash today. And that's very important as well to the topic today, which is around advice. So really quickly, so there's no illusions about what we do. We help people invest better so that they can live easier today and prepare better and therefore live better tomorrow and through retirement. Today, we're covering 3 topics. One is what we call foundational. So talking through the different types of financial advisors and how they might hurt or help you in reaching your goals. The second is very topical, with the new fee reductions that were enforced as of the 1st of October, just a few days ago, for the CPF investment scheme. And the third is personal. So how does this information apply to me in a practical sense, where I can decide whether or not to use a financial advisor and make sure that I am using one to actually improve my outcomes, improve my future. First topic, foundational. So there are different types of financial advisors, and we start with this funny cartoon of a doctor offering a patient a pill. It says, try this. I just bought 100 shares. Now, immediately you would think, well, this seems kind of messed up. How is it that the doctor is giving me this pill versus another pill? He has a vested interest in selling this pill because he owns that company himself. So if he increases the sales of that company, that would mean more revenue for the company, and maybe the company's stock price would increase. The financial services industry has a similar problem. So, money incentives really make the world go round. This is 90+% of the industry in Singapore is run this way. And it doesn't matter if you are with a retail bank or a financial advisor or an insurance agent or a broker or a fund, a fund platform, a low-cost fund platform. There's this thing. So basically what's happening here, and it also doesn't matter if the fees are seemingly zero. So they say there's no platform fee, there's no sales fee, there's no XYZ fee. You have to ask yourself, well, how do they make money off me? And we'll be focusing a lot on a concept called fee-only advice. And by being a fee-only advisor, you cannot make money from anyone but your client. So your end client, the client you're serving. But that's not the case for most of the industry. In most of the industry, the distributor, which is in the middle here, they make their money primarily from the product providers, which in this case are the fund managers. Therefore, distributors are incentivized to sell you product where they get the highest trailer fee kickback. And if there are sales fees, as there are in many channels right now, they're also incentivized to churn your account so that they can keep on collecting more and more sales fees. So we like to say that, money really makes the world go round. Now, what's interesting is that this trailer fee concept is actually illegal in certain developed countries. The UK and Australia most recently outlawed the ability to make kickback sales commissions in financial services from, let's say, product providers. So that's a really great thing for the industry, but it is still primarily the way funds are distributed in Singapore. With Endowus and with other fee-only advisors out there, and there are only a small handful, we work for you and only you. This means that you pay the fund level fee. There is a trailer kickback, but 100% of it comes back to you. And you pay Endowus one all-in access fee. We don't make money on your transactions. We can't make money on sales fees. We have to kick back all of the trailer fees. And this incentivizes Endowus to only have one goal: make your investment experience successful. Because if we can make your investment experience successful, we can retain you as a client. We can keep on finding the best investment solutions out there and make them available to you. And that is exactly what we set out to do. So access to great products, suitable advice, and alignment of interests at low cost. So just like any industry, if I'm a doctor, you would say, hey, how can you be giving me this drug, which may not be the best drug for me, given my goals, and get kickbacks from the drug provider, from the pharmaceutical company, or be an owner in that pharmaceutical company, to actually not be properly aligned with me. So with anything in the business world, with any business, it's all about incentives. And in our view, Sam personally, having experience in finance, having been served by the retail banks to the global private banks, what we realize and what we're trying to fix is that if you can align the incentives, the rest will fall in place. So that, we think, is absolutely critical to your success as an investor. So Endowus is, as a result, when we structured the business, systematically aligned to you, because we are not paid by anyone but you. We're only paid by our clients. It doesn't matter if you're investing CPF, SRS, or cash. We are only paid by you. And we are what you call a fee-only wealth advisor. And we can therefore act in your best interests and be unaffected by conflicts of interest. Now, this may all seem very obvious to you and be like, yeah, well, that makes perfect sense. But it is not the way the industry currently functions, not at all. So, if you're watching this webinar, it's likely that you are already, you've heard about Endowus somewhere, or you're already a client of Endowus, and thank you very much for being so. Being able to proliferate this concept and get it to more people, structurally aligning incentives, will lead to a much better investment experience for everyone. So, when you're the individual investor, you are paying the distributor and you are paying the fund management companies in terms of the expense ratio of the fund. It doesn't matter if you're a bank or a private bank or an FA or a broker or a fund platform. There is then a kickback from the fund management companies back to those distributors. And it's hidden to you because it's charged out of the fund expense ratio. So the fund has a cost. They say that cost is 1.7% or something like that per year. And that's just taken straight out of the NAV of the fund. You never actually see it. But little do you know, in some cases, up to 70% of that fund level fee that, let's say, a fund manager collects is actually just going back to the distributor. And what happens a lot of the time is the distributor is negotiating with all the fund managers and saying, well, if you don't pay me more in terms of a kickback, in terms of a trailer fee kickback, then I'm not going to sell your fund. I'm going to sell the guy down the road's fund because he's paying me more than you're paying me. And this merry-go-round just keeps on going and keeps on going. So, it's really about aligning incentives. You only pay us very, very transparently. If you're already a client, you will see that you can actually, on the Endowus app, you can look up exactly the amount you've ever paid Endowus since the inception of your relationship with Endowus. So that's what you can do. I mean, that's the level of transparency that we provide. You can see the exact amount we've ever earned off of you as a client. We kick back 100% of the trailer fees. You, of course, pay the fund management company very cleanly for their services of fund management. And any trailer fees there are, we kick back to you 100%. So we send everything back to you so that you keep more of your returns. We are aligned to you, which we think is the even more important part of this structure. And a lot of times we this is a funny emoji here. A lot of times we speak to clients and they really do have a facepalm moment because they locked themselves into a policy 10 years ago, or they just signed up for a policy. And in doing so, they had no idea how much their financial advisor was actually making off them because it was hidden to them. It wasn't in the form of a sales fee, but it was hidden in the form of a kickback from the product provider. So let's say, it's very common for people to buy insurance-linked products in Singapore or insurance wealth products in Singapore. And, let's say you sign up for a policy that's $100,000. That day you sign up and deposit the money, because that money is locked up in most of those policies, the insurance broker or the broker who sold you the product gets up to 5 to 10% of that policy value. So $5,000 to $10,000, and they get to take that home immediately because the policy is structured such that the product provider will make enough money on it, and they have very, very strong distribution with these very, very strong sales incentives to sell that product. So it's no surprise that high-cost products, high-cost funds sell very well in Singapore because naturally the kickbacks to the distribution is higher. So, as a financial advisor licensed by MAS, and as a firm that's very, very proud of our independence so that we can serve you better, this is extremely important to get across. Being transparent is extremely important to get across as a foundational piece to your wealth experience. And this was published in the Business Times last year. Morningstar did a study. Singapore actually ranks, Singapore, we call it a fintech hub. We call it a wealth hub. We call it, one of the most advanced countries in the world. We have, in terms of the global scorecard, we are below average. Right? We are worse than South Africa. We are worse than India and China. We are worse than Thailand. And of course, US, Netherlands, Australia are very advanced in this game. We are below average, and it's a distribution problem. And it really comes back to the incentive alignment and the trailer fee kickbacks, which most advisors live off. And we're not saying that, financial advisors and insurance agents are bad people or not doing their jobs properly. It's only natural for them to behave this way because this is how they make more money. This is how the incentives are aligned. So this problem of Singapore being here on the global scorecard is no surprise, unfortunately. But firms like Endowus, we hope, can really push the boundaries and fix the core issues at hand by bringing more clients and educating more people about this problem that persists, that is seemingly swept under the rug and very hidden to people. And sometimes people say, well, I really like my financial advisor, and that's great, but you have to realize the additional cost you're paying and the amount that is affecting your returns. So this is a very, very simple chart. There's no investment product behind this. I literally wanted to show the difference between different rates of compounding return. We did a number of surveys and looking at what people are on average paying in their first year of investing their CPF, for example, or their cash, for example. And in some cases with the sales fees, we're talking about 3, 4, even 5% all in. So sales fees, custodian fees, platform fees, and then the fund level fees. That ends up being enormous. So if we compound returns over 30 years, a 10% compounded return is fantastic. That's 1,600+% return. Let's go down to 8%. We're looking at over 900% return on your initial investment. But the average investor actually does worse than 3% because of, well, a couple of things, but cost and mostly behaviorally trying to time the market, trying to make bets and things like that. But that's a separate issue than what we're talking about tonight. And a 3% return, you end up with a 143% return versus a 900% return after 30 years. So the power of compounding, and therefore the power of fees, and therefore, if you really bring it back to its foundational core, the importance of alignment of interests is critical to your success. So foundationally, we believe, and Endowus is not the only fee-only advisor. We are one of the leading fee-only advisors in Singapore. Having a fee-only advisor as your wealth partner, and therefore being aligned with that advisor, is critical to your success. So I would just say, if you have a financial advisor today, find out if they are being paid by others other than you. Find out how much they're being paid. I mean, we'll talk more about this in the personal section at the end, but find out how much they're being paid by people other than you. And then find out if you think that's worth it. Okay, I'm going to hand it back to Sam.
Excellent. Thanks, Greg. Before we move on to the topical discussion of CPFIS fee cuts, did want to address some of the questions that we have at this stage. So SSC asked a question about how do we tell if a financial advisor is fee only? Would it be too expensive? Greg just answered that. I think when you ask the financial advisor, they should be telling you exactly who they are. And this terminology is very confusing because there are financial advisors and there are fee-based financial advisors and then fee-only financial advisors. So when we talk about true independent financial advisors, we're talking about fee-only advisors, and that's fees paid by the client directly to us, the financial advisor, and they are paid by nobody else. Then they're fee-only, truly independent, aligned to the best interests of the client. Really sticking to their fiduciary duty. The guys on the far left, which is just financial advisors, and in Singapore, a lot of them are just insurance agents selling insurance products or insurance-linked products, which are terrible things that have resulted in really bad outcomes for investors over long periods of time. And we believe, like most other people do, that you should separate your insurance, which is for protection and coverage, and your investment. So insurance and investment should be separated, and investment should really focus on real, true investment, globally diversified, low-cost solutions which get you to the investment success you deserve, and then use insurance purely for protection. So you should separate those two. If you combine them into an insurance-linked product or an investment-type product, sold by insurance agents, then you get the worst of both worlds. So you get expensive, and you don't get expensive fees, and you don't get the proper coverage, and your investment outcomes are also poor. So that's one thing that we need to focus on. So the pure FAs, which are very mercenary, pushing new products and cutting, getting a cut of the fees through trailer fees, etc. And then the far extreme, the other extreme, which is fee only, like Endowus. And then the ones in the middle are called fee based. So they do receive a client's flat, mostly fees, but sometimes they can also get paid by the financial product provider. So they're kind of in the middle. So please make sure that you know the terminology, that you go ask your financial advisor exactly how much fees they are getting, who they're getting it from, and how that impacts the outcomes of your investments and your insurance coverage. Now, Stephen Lim and Tamming Min asked this question about robo-advisors. So I want to clarify this before we move on to the second section, because it's really important. When we talk about financial advisors, that is an official MAS terminology. So the regulator here in Singapore for financial services is the Monetary Authority of Singapore. Financial advisory services is a regulated activity. It's licensed and regulated by the MAS here in Singapore. The term robo-advisors is just a colloquial term. It's a common terminology, a non-specialist term that we use to talk about people who provide some kind of digital service for wealth and advisory services. Now, from a regulatory service, there are two types of license holders in the robo-advisory space here in Singapore. One is a financial advisor like ourselves, and we have some others that are in this field. I think Auto Wealth is another one that is an FA. The other guys actually, especially since Tamming Min specifically mentioned Stashaway and Saif, those two robo-advisors are licensed as fund managers. So they're FMCs, fund management companies, and they're retail fund management companies. So the way to differentiate it is FAs provide advice on your investments. Fund managers build products which you can buy. So from that perspective, it's very simple to understand. Stashaway runs their ER, economic regime-based active allocation, and then build a portfolio around it and actively manage it for you with discretion. Saif actually builds products like a REITs fund or a growth fund or an ARI fund. And so they focus on building product. What we do as financial advisors, as independent financial advisors, is give you independent advice, holistic advice about how you plan your financial and your wealth, financial planning, and also wealth planning. And Greg will touch upon this in the third part about why you need a financial advisor and whether it's worth it. So we'll touch upon those things at the end, but just to separate those things. And I wrote this article before about what's in a name. We actually don't like the name robo-advisors because there's no robo. It's normally some guy deciding the asset allocation. It's not some algorithm-based stuff normally. And that they don't normally provide advice, especially if they're licensed as a fund manager. So it's a misnomer because there's no robo and there's no advice. So it was tongue-in-cheek, but it's, if you can dig up the article, it's in our webpage, our completely revamped press page. So you can have a read on those topics and it will help your understanding a little bit more. CK, your question about UOB fees, I'll touch upon as we go through this. Greg. So CPFIS, CPF board has announced the second round of fee cuts. The first round was in October of 2018. The second round was supposed to be 1 year later, 1st October 2019, but it actually got pushed back. And so it was just implemented 1st of October last week. And the sales charge, which used to be as high as 3%, is now down to 0%. And the wrap fee, which is the fee that most people pay for insurance or financial advisory services, has gone down from 0.7% to 0.4%. Now, if we go to the next page, I'll show you what the trend has been. So basically, the trend over the long term has been, if you look at the fees that the industry was being charged. So this is the average CPF member. Prior to 2018, October, when CPF implemented the first range of cuts, the upfront sales charge was as high as 3%. There was a wrap fee of 1%, and the median fund level fees were also really high. So there was a round of cuts for median fund levels, and there was a cap that was introduced by the CPF board. Until then, the total cost, especially the first year cost, was as high as 6.85%. Now, with the cuts, it's come down to 3.92%. But Endowus, when we launched the service, was already targeting something that was below 1%. And this answers, CK, your question about whether we can eliminate charges from UOB Kay Hian. And most of the other platforms and brokerage services charge some kind of a platform fee for their service as a CPF investment administrator. We brought in UOB Kay Hian and worked together to get UOB Kay Hian included as the fourth CPF investment administrator last year. As they did that, because we are strategically tied and we wanted to offer CPF members the lowest achievable cost, what we are doing is offering 0.4%, which is the lowest wrap fee possible, but we're actually eating all of the UOB Kay Hian platform fees. So the 10 basis points, that is the platform fee, is actually taken into our total fees. So there isn't a single cent that you're paying to the platform or the investment administrator. So UOB Kay Hian is not being paid by you a single cent, and it's incorporated in the total fees that have been provided. The other thing, though, that we really want to note on this chart is that, yes, the fund level fees have come down a little bit, but in this round of cuts, what has not been touched is the fund level fees. So the sales charge comes down to 0, the wrap fee goes to 0.4, but the median fund level fee of 1.6% is still there. And so if we compare currently now with the fee cuts, how much does it cost for somebody to invest in, a portfolio of funds or a single fund? There is this still high fund level fees of on average about 1.4%. The cap for equities is as high as 1.75%. So if you include the wrap fees in the case of a financial advisor, and if you include the platform fees in the case of a DIY platform, then the total cost is still very high. And the reason Greg has highlighted again and again, and we highlight this again and again, that the fund level fees include loaded fees, loaded with trailer fees. The trailer fees that the DIY platforms like Fund Supermodel, Dolodex gets from the fund manager. The financial advisor, especially if they're not fee only, also gets charged, gets a rebate of the trailer fees. Now, anything that we receive, we've been able to negotiate higher rebates with some of our partner fund managers. We give all back to the client, which is you and all the CPF members. And therefore, we are able to achieve a fund level fee, which is much lower. So for equities, it's higher, 90 basis points. If it's a fixed income product, then it's actually as low as like 30 basis points. So 100% fixed income portfolio, even with that 0.4% Endowus fee, is much, much lower at 70 to 80 basis points. For equities, it's higher, but we've brought in new funds that are lower cost. And we hope to have the new funds that are going to be coming in, especially dimensional, for example. If they come in, we'll be able to achieve even lower fees than this. So Greg, if we can move to the next slides. We do want to highlight before we go on that there is, this fee cut does cut both ways. There is a dark side of the fee cuts. Now, because there is a hidden portion of the fees that we mentioned, trailer fees, the major players, the incumbents in the CPFIS space are distributors like insurance agents or banks or fund platforms or brokers. They continue to have an incentive to sell other types of products with a lot of hidden margins. We've heard the case of a fund platform trying to negotiate a higher rebate so that it can offset some of these wrap fees that they're going to have to lose. Insurance agents are also going to be suffering from lower wrap fees, and therefore they're trying to get higher rebates and that will be added on top of the fund fees. So fund level fees may actually increase going forward, especially if it's packaged into an insurance linked product. So we have to be very aware as consumers and investors and users of the CPF investment scheme to make sure, as Greg highlighted, to ask the right questions, to find out what the fee structure is, and to fight and negotiate for lower costs.
Yeah, can I add something?
Sure.
So I just, what's happened with the fee cuts, and we think, of course, it is positive for the investor, but what's happened with the fee cuts is because they don't exist in the broader market. So in the cash and SRS market, for example, these types of fee caps don't exist. If someone has a very short time with you, they need to sell you a product where they can get enough of a margin for them to actually make sense for them. So, and we have heard this happening in the industry. We've heard that in some cases, the underlying funds have been told to increase the trailer fee for CPF so that they can get more trailer fee to make it more worthwhile, because they can no longer collect a sales fee, for example. Mm-hmm. The insurance wrapped products, they are locked in, but locked into that premium that you pay is already the sales incentives. So net, you're paying a lot in fees, even though you don't necessarily see it. It's not registered as a sales fee. So behaviorally, because incentives have to be aligned, what we will see happening likely is that when products are sold, they will be higher cost products because the hidden fees will have to be higher. The hidden incentives will have to be higher for them to make sense to touch the CPF pool of assets. So yeah.
Greg, can you go back 2 pages to the CPF fee? Yeah, one more. Yeah, no, the next one. Rohan has a question about, if you buy the same funds on the Endowus versus the others. Now, just to clarify, the one-off fees, the first-year fees, have been completely removed now. So that's a sales charge. So everybody else is now competing on fund level fees and ongoing fees, such as wrap fees and platform fees. So, and this is like other things being equal, platform fee versus wrap fee versus what Endowus is able to achieve. Now, the key difference here is the trailer fee. So that's the only difference largely between Endowus and everybody else, is that we 100% rebate the trailer fees, or we access an institutional share class, which is a clean share class without loaded fees. And therefore, that's why we're able to achieve a lower fee. And this is the lowest in the industry, but also this is what's going to be annually charged to you, 1.6 and 1.8% with the other platforms. And just to reemphasize this point, we're going to skip to the next slides on how it compares not only in the CPF investment scheme, but now in the cash and SRS and other areas as well. Greg, if you can skip to the next.
Yeah, just one more thing, Sam.
Oh, sure.
People may be looking at, like, why is Endowus say 0.9 versus DIY say 1.4% fund fees? And that is also because Endowus accesses funds that other firms don't distribute at all. So we'll
go into that with the fund manager slides later.
So things like the Vanguard managed S&P 500 for CPF, which is wrapped by Line Global. Endowus currently is the only distributor of the S&P 500 for CPF money. Same with the Vanguard managed Global Stock Index Fund. You can buy those things in Endowus portfolios at an extremely low cost that you cannot actually allocate to through other platforms at all. So we'll talk more about that in a bit.
Yeah, and just to comment on Vistry's question and comments, yes, if you invest through Endowus, you'll always be protected and you'll always be accessing at the lowest cost possible. And we'll continue to negotiate higher trailer fee rebates to get you to a lower fee. Now, I wouldn't go so far as to say that the fee cuts are, a paper tiger, because I think what the CPF board has done is tremendous. to remove sales charges, which are very commonplace that still through bank channels, is an amazing thing. To lower wrap fees down to 0.4%, I think is an exceptional thing. And just to let you know, when we launched the service last year, we started with 0.4%. So the industry is now going to come to us because we are currently, with the new introduction, the only compliant financial advisor with the lowest wrap fee of 0.4%, which was not being met by anybody else other than ourselves before. But just to emphasize the point about how big that impact of trailer fees is to the actual cost of investing. And we have to always remember that cost and returns are two sides of the same coin. If you can lower cost, your returns increase. If you increase cost, then your returns decrease. So it's exactly the most important thing that you should be focused on. And the easiest way to improve returns is to lower cost. And that's why Endowus is so fixated at lowering the cost of investing at every layer, wherever possible. And Endowus's fees is the total all-in fee. There's nothing else added on top, no transaction, no brokerage. CK, again, your question, UOB Kay Hian fees are not in your statement. We eat everything. You don't have to do anything else. And there's nothing added on top other than the bank charge, which is something that's outside of our control and it's relatively minor. But even that, if you go DIY and do it yourself, is $2 per fund. Our CPF portfolio is 7 funds, that's $14 if you do it yourself. But because we package it into one portfolio, you only have to pay $2 per transaction. So we're saving you even there a meaningful amount if you dollar cost average or have a regular savings plan. But this chart shows, PIMCO, which is a very popular, fixed income manager. Their income product, for example, or their global bond product is the best out there. And this is how it compares to a retail bank, which still has this sales charge embedded in their cost, or a DIY platform like Doladex and Fund Supermart, where they have a platform fee and also a portfolio fee. And they access the retail share class, which is significantly more expensive. Because we work with PIMCO to access their institutional share class, the cost at the fund level is a fraction. And also it's, because of our fee structure, it's actually lower than any other source of distributor that you can think of. And it's even cheaper than going through a large Swiss private bank where you have to have like 10 million or 25 million to access these institutional share class. And also the next page, we also want to highlight, for example, cash management. We launched the Cash Smart solution that is like a bank deposit, liquid cash management account service that Endowus has launched. And you look at how much it would cost to go through a retail bank to build the exact same portfolio versus a DIY platform, again, where there's retail share classes and no rebates that they get to keep themselves. Through using the Endowus platform and using the Endowus Cash Smart portfolios, and even building your cash management account on our new Fund Smart solution for existing customers, you can actually access much lower fee structures, which will hopefully improve the outcome for all investors. With that, I'll hand over to Greg for the final section.
Yeah, so just, the fee cuts are great, but just beware the double-edged sword. You solve the double-edged sword by actually the foundational piece, which is the alignment for success. So, it's all a related topic on how to sort of structure your wealth and your advice properly to serve your needs. So, do I need a financial advisor and what is it worth? It all comes back to you. So for us, we have a very clear objective and we have a very clear role to play in the lives of our clients. In your world of Endowus, you have precisely defined goals, a systematic process to achieve those goals, and the access to the expert strategies and products, so in this case, mostly funds, to achieve those goals with a high probability of success. So what exactly does Endowus do? We advise, build, execute, and maintain your wealth portfolios. You control everything from Endowus.com, you as the investor. We are an MAS licensed financial advisor, and we do the portfolio construction, monitoring, get access to products, etc. We have an execution broker, and which is also your custodian. This is UOB Kay Hian. So when you invest with Endowus, the money goes through UOB Kay Hian, gets transacted in the markets, etc. When you create an Endowus account, we create an account at UOB Kay Hian, which is Singapore's largest broker, in your own name. So we have a very, very clear and secure structure where all the parties are aligned. Finally, we create portfolios based on your goals and risk tolerance, suitable for your needs on the best products available. And this idea of products is super important. I'm going to hand it back to Sam really quickly, who's our Chief Investment Officer. Something we really want to emphasize is that we stand on the shoulders of giants. So Sam, I'll let you take us through this slide.
Yeah, so we work very closely with all the major global and local fund managers. Now, fund managers, as I explained earlier when I was comparing with the other robos, is the entity that builds the funds that we use to invest our money. Now, PIMCO is the largest fixed income manager in the world. Vanguard is the largest and the inventors of passive index investing mutual funds in the US. And Dimensional are the pioneers of systematic, science-based, quantitative, factor-based investing in equities and fixed income. And so these guys are the best in class, the best in breed fund managers around the world who manage hundreds of billions, if not trillions, of assets. Now, a lot of guys try to copy these guys. A lot of these, upstarts and robo-advisors trying to, copy other good strategies. But without the scale, the efficiencies, and the cost advantage, the intellectual, legacy, and the ability to build products very efficiently, we don't think that they can compete. So we use PIMCO for a bulk of our fixed income products. They have a suite of products that are fantastic. Now, Endowus is the ones that worked with PIMCO to bring in institutional share class. So a fraction of the cost of retail funds. We actually build Sing dollar hedged funds with PIMCO. So they're locally tax efficient, but also, Sing dollar hedged, and so they're FX efficient. But also we build them across Irish UCITS-based funds, which are more tax efficient for Singapore-based investors. So Endowus really works and thinks out of the box to try to make investing efficient for you. And these fund management partners are global players and large local players who will be able to solve this efficiently for us. And we are not competing with them because we're not trying to build other fund products. We're actually completely aligned to them in working together to find solutions that are most suitable for Singapore-based investors, which are FX hedged, which are tax efficient, which are low cost, and which are the best in class and best performing. Vanguard, we work together with Lion Global, the largest local fund manager, to introduce passive investing into CPF. So CPF investment scheme did not have any passive investing options available to them other than some local STI ETFs. And that was not enough. There was no globally diversified investment options for passive investing. So we worked very hard with Vanguard to bring in the first S&P 500 US equity fund and the global equity fund, which allows for low cost diversification into passive index investing. So passive index investing for CPF is only available through Endowus. And the reason is very simple. As independent financial advisors working in your best interest, we are giving 100% rebate of any of the trailer fees that are built into that fund. And therefore, we're the only ones that are compliant to the CPF guideline of passive index funds, which have costs of 0.5% or less. So we're the only ones that are compliant. So if you want to invest your CPF money into passive index funds, Endowus is the only option. And finally, Dimensional only sells its funds through financial advisors and independent financial advisors as well. So it's not easy to access. It's not available to everybody. but Endowus has made it available here in Singapore. And Endowus is, as far as we know, the lowest cost way to access dimensional funds in Singapore for sure, and if not, around the world. So these are special funds, and we're working with 15 other fund managers and more to bring best-in-class products and solutions and funds at the lowest cost achievable for the benefit of all investors. Greg, back to you.
Yeah, sorry, just one more thing to add, Sam. I mean, I think, when you select a financial advisor, you want one that will think outside of the box. And that is definitely, the value that we believe Endowus brings. Given the team of experts that we have, in particular, Sam's, 2.5 decades of experience in the industry and running one of the large asset management firms for Asia, I think, we know how the industry works. We know how to bring in the great products. We know how to identify great products. So as a result of all this, through a financial advisor like Endowus, you get access to institutional share class funds. Again, 100% trailer fee rebates. Things are Singapore dollar and Singapore dollar hedge solutions. If they don't yet exist, we actually bring them into Singapore by working directly with the fund managers and utilizing their scale to keep costs low. It's about getting expert advice and an asset allocation that makes sense for you. Again, no lockups, daily liquidity, and finally, money and positions, your assets are securely held in your own name at UOB Kay Hian. And we believe that this is one of the major strengths of Endowus as a financial advisor, as a wealth platform, as the first and only digital advisor for CPF, SRS, and cash. We focus on, again, 3 things: access, advice, and cost. We've gone into this in detail today, so I'm not going to belabor here. But when it comes to actually getting down to okay, so how does all this apply to me? Think about how do we properly advise you with your unique life stories and ambitions? And this is one of the great questions we asked ourselves when we started the firm. And it's about matching your future liabilities, your future cash flow needs, your ambitions with your assets today, and having a realistic strategy to achieving those goals. So you have different types of money needs, and money is really meant to fuel your life. So you have different types of money needs. You have cash flows, you have lump sums. That lump sum could be 3 years from now, or 7 years from now, or 15 years from now. You have continuous cash flow needs. So we can call that a rainy day fund. You need a certain amount of money to put aside that will be with you no matter what. That's not going to be very volatile. That's not going to be invested too aggressively in the market. You want to plan for retirement. You want to plan for your kids' education. You need to continuously pay rent or your mortgage or whatever it is. That's a cash flow need. How can you invest that capital today so that it matches the needs of the future? So we really help our clients, sit down, plan, think about how to systematically solve their wealth. We cannot control the markets. We have no false pretenses in knowing where the markets will be in the short term. We understand the science of markets and how different types of securities and how diversification and how keeping costs low and how professional implementation through these great fund managers leads to better outcomes for people. So we take the appropriate amount of compensated risk in the markets based on your needs. So for cash management, we're investing primarily in money market funds, very safe government and corporate bonds, for example. If you had needs in the next 2 to 5 years, let's say you need to renovate your home, you need to buy a new car, you need to something else, put on a down payment for a home that you're planning on purchasing, you don't want to take much risk with that money. You might be in 80% bonds and 20% stocks. And then as you move out in terms of your timeline, you can afford to take on more volatility And we can then determine what type of portfolio you should have, what type of very efficient portfolio you should have to address those needs. And you have to remember, life can be really messy. You can have many goals, many priorities, and you end up with this, list of things that, it could have lump sums here, cash flows at different rates, et cetera. And all of that ends up rolling up into a holistic portfolio for you right now and at every point in the future. And that's really what Endowus does and wants to continuously do for people. Again, our goal is to help you invest better so that you can live better. We're not saying invest better and make the highest return possible, because in our view and with our experience in the markets, that would mean taking risks that are beyond what you actually need or you actually should be taking based on your goals. So when it comes down to actual portfolio construction, we do all of the screening and analyzing, looking at fees, talking to fund managers, bringing in products, making sure it's currency and tax efficient, et cetera, making sure it's the lowest cost possible for you, because we are not paid by the fund managers, remember. So this is a clear differentiator from most providers out there. And what you end up with is a portfolio of best-in-class products that are accessed at the lowest cost, mapped to your specific priorities and goals to achieve the highest probability of success. I mean, you will know that, we've worked closely with many systematic managers, and we're constantly looking at the industry and how it's evolving, how things like AI might affect fund management in the future, how things like more systematic based, how low cost indexing, how they affect different asset classes. And we are constantly looking at the industry, understanding where different strategies excel and don't excel. And you have to understand that the fund managers we work with, they manage hundreds of billions, if not trillions of dollars, and have a whole bunch of different strategies. So it's our job, it's our investment office's job to comb through all that information, make sure that your portfolios are in the best place for the future. And once we decide on the building blocks, we really understand the sources of returns and the costs involved to get to a net return. So that includes things like, compensated risk, the equity risk premium, the size risk premium, the credit risk premium, the term risk premium, things like that, making sure that we're allocating to them efficiently. Understanding how the fund managers are actually governed, making sure the right structures are in place, that it's tax efficient, that we're getting in the lowest cost, portfolio, and then of course making sure that the fund manager does what they say to get to a net return and to get to a comfort level of actually distributing and putting those products into portfolios for our clients. And what you end up with is a tailor-made, optimized portfolio or portfolios for your goals. And we don't require we don't do any back testing. These asset allocations are static, so they don't require us to say, oh, well, back in 2008, we knew stocks were going down, and therefore we did not allocate to stocks as much. I mean, we think, given our experience, we think that making those assumptions is extremely difficult as an investor. So, that type of back testing that requires you to time the market properly and consistently will lead to very, very poor probabilities of success. So we are trying to target higher expected returns by taking compensated risks for our clients. And ultimately, it's our job as a financial advisor to help you focus on what you can control as an investor. And not to focus on what you cannot control, which is what a lot of people, we think, spend too much time focusing on, and that leads to sort of chasing your own tail and poor outcomes. And, a lot of times clients come to us and they have pockets of money all over the place without one cohesive strategy. They say, oh yeah, the broker who was my uncle sold me this like 10 years ago. This guy sold me this other thing a couple years ago. My friend told me to buy this, so I bought it through this brokerage platform. I did this and I did this, and there's no clear strategy. What Endowus does is it helps you build a holistic strategy across all your money, CPF, SRS, and cash, to have a certainty of outcomes in reaching your goals. And this strategy has to be unwavering in periods of uncertainties so that we can reach your goals. And that is what Endowus does for its clients. So when you think about if you need a financial advisor and whether it's worth it for you, in our view, and we think the value that Endowus brings is access to the experts, the strategies, the proven products with real track records of implementation, all wrapped together to achieve your goals. And if that is the solution you're looking for, then it makes sense, we think. If, and I'll give the other side of this, if you're like, no, I just want to buy a one allocation to one ETF or one something, that is not the value that an advisor is bringing. So again, whether or not it's worth it to you, just think about if you want access to the experts, strategies, and products to help you achieve your goals. Finally, to round out tonight's talk, and I think there are a few more questions that we should get to. We quietly launched the Endowus mobile app. You can now download it on the Google Play Store or the App Store. As you know, we've had a fully responsive web app across your desktop and your mobile browser of choice. We have recently launched a native mobile app to further enhance the convenience of using Endowus as your wealth partner. So please check that out and please give us your feedback. We'd be very excited to hear it. Finally, for those of you just joining us, next week, Dimensional is joining our webinar, and their head of wealth management in Asia, Japan, Joel Teasdale, will be on the show with me at 5 p.m. on Tuesday. Sam, let's.
Yep. I think we need to wrap up, but we have two questions, and the same question from CK and Peter. I think our Endowus team and also I have been able to answer most of the questions that are outstanding. So I don't think we have anything outstanding. But just to answer CK and Peter about the sustainability of the Endowus business, we are well funded, so we are able to sustain our business for many years to come. As we mentioned, we're an independent company, owned and operated by the partners and the employees. So every single employee in this company owns a piece of the company. So we're not only aligned to our clients, not only aligned to our partners, fund management companies and the brokerage company, UOB Kay Hian. We're not only aligned to the CPF board and all the other partners we have, but we're also aligned to our employees. And that's the really differentiated way of doing things. And so we're very proud of that fact. We're very well funded for many years to come. We can fund it for longer. So I don't think you have to worry about that. And the level of AUM that is required to become profitable is always a moving target, but we hope to be profitable next year. So let's just put it at that. And we're growing well, so that's very exciting. And thank you to all of our clients and for the people who joined us today. Actually, a couple of questions have popped up. Do we need anything to answer? Oh, okay. So discussions among yourselves. So similarity between Endowus and Provident, Greg. Should we answer that question? Do you want to take that first, or?
Yeah, I think we have a huge amount of respect for Provident. So I just want to put that out there. They are, as in that foundational piece we talked about today, they are as well one of the leading fee-only advisors in Singapore. Chris, who runs the firm, has an extremely strong moral compass, and I believe has helped many clients along the journey and has helped the industry improve as a whole. I would say that, I mean, there's no doubt that Endowus is more digital. We also access, I think, a broader suite of products. We also are lower cost than them. I mean, I think the fee structures are pretty clear, but I would say, Provident probably has a few more services than Endowus. Endowus is really focused on wealth and investing. Provident has a couple other parts of the business and services that apply to some clients. I think that's what I would say. But we are focused on wealth and investing, and we're very clear in that focus and where we want to sort of lead the industry going forward.
Yeah. So I think that's answered most of our questions. We are, Peter, a very ethical company. We're very missional. We're a purpose and value-driven company. And that's partially why we align ourselves with, great companies like Provident in terms of our values. And Chris is a great friend of ours, and so we respect him, and we wish them well as well. But I think they're playing a different segment to us, and their traditional roots are also financial planning, but also insurance as well, which we do not do. So there are certain differences, and the biggest difference Greg highlighted is digital, low cost, CPF focused as well. We're the first and only digital advisor for CPF money. We're the only platform where you can access your CPF, your SRS, and your cash. So we do hope to meet the needs of all CPF members in the future, but also SRS and cash savings, so that investors can go to one platform and be able to manage their whole wealth, and do it holistically and through their whole life. So thank you once again for joining us, and I think we should wrap up in the interest of time. Thank you, and please join us next week for the wonderful webinar that we'll have, that Greg will host with Joel from Dimensional. Thank you, guys.
Thank you, everyone. Good night.